Good afternoon, ladies and gentlemen. Thanks very much for joining us for this session on cryptocurrencies and crypto assets. The panel today is titled Crypto Assets and Cryptocurrencies Managing the New Asset Class. The panel discussion is moderated by Melissa Lee. Melissa is owner of Plutus Strategic Investments in Singapore. Melissa, I'll hand it over to you.
Thank you, Alex. We have an exciting panel today. We have three blockchain crypto experts with us, and to balance off, we have also someone representing a single family office. Just to give you a quick by way of background, I have my own family office, and one of the hats I do is I look at early stage tech, and one of the areas is blockchain. So I'm directly involved in two blockchain companies, hence my involvement. But I want to let the panel introduce themselves. Perhaps Henry, could you start and give a quick introduction of yourself and your involvement in the blockchain crypto space?
Absolutely. Thank you very much, Melissa. My name is Henry Chong, and I'm the CEO of Fusang. Fusang is Asia's first stock exchange focused solely on the listing and trading of digital securities. And by that, we mean traditional securities like shares, bonds, funds, etc., but represented in blockchain-based and tokenized form. I keep all these intros short, but I guess just to say that on this panel, I'll probably be wearing the hat of the exchange and also offering insights focused on the digital security space, even though we also trade in things like cryptocurrencies.
Cool, thank you. Ryan, would you like to go next?
Sure. Thank you, and thank you all for having me. So my name is Ryan Miller. I head up the institutional sales here at OSL in Hong Kong. By way of introduction into OSL, it's Asia's leading digital asset platform. We have 4 key verticals: OTC brokerage, software as a service, an institutional exchange, and a fully insured custody solution. And to maybe finalize, the company is wholly owned by a main board listed company here again in Hong Kong. We're audited by PwC, and recently we received approval in principle from the Hong Kong Securities and Futures Commission for Type 1 and Type 7.
Thank you, Ryan. Alex, how about going next?
Sure. So my name is Alexandre Kesh. I'm the CEO of On-Chain Custodian. So On-Chain Custodian is a Singapore-based, insured, secure, compliant, and convenient custody service provider. We provide services to institutional and sophisticated investor in the safekeeping of their assets, but also in helping them navigate the landscape of cryptocurrencies and digital assets in terms of buying and selling, and also in terms of investing into financial products around cryptocurrencies.
Thank you, Alex. And last but not least, we have Sunil, who represents a single family office. Over to you.
Thanks, Melissa. I work as a CIO with a family office based out of Dubai and New York. Since last year, we have started taking a look at the cryptocurrency and the blockchain space, both in terms of the assets and proxy play in terms of listed entities, which would be benefiting from this trend. Thank you.
Thank you. Now, what we're going to do just before we go into the main body of our panel discussion, we wanted to maybe share a poll. Alex, if you can help us to launch the poll to the audience. Just 3 very simple questions. If you have exposure to crypto and other digital assets, if not, why, what are the hindrances? And then the last but not least, if you're already invested, in what form? And we can share the results a little bit later on. But maybe what we can do is to kick off, since Sunil, you are from a single family office, can you give us some perspective on your side, what your experience is in terms of cryptocurrencies and digital assets?
All right. So when you look at cryptocurrencies, I think Bitcoin was the first one to be launched in 2009. And it was only from 2018 that people have, or institutional investors have started taking a look at it seriously. And if you're looking at the increase in the volatility of all these crypto assets and all that, I think it's going to be a little bit of time before investors like us take a very serious look and allocate a bigger part of the portfolio to this asset class. But at the same time, we are quite excited about the opportunities that this space has in terms of the idiosyncratic bets. I mean, the earlier investors, whether it be in the crypto, so like Bitcoin, or related infrastructure like Nvidia shares and the ETFs and all that. I mean, they have made humongous amount of money, and I think that trend is something that we will see it accelerate in the coming decade.
It's interesting. In a survey by Fidelity Digital Assets, this is the crypto arm of Fidelity Investments, they did a survey of 800 institutional investors in US and Europe, and some 80% find crypto appealing, and another 60% find that crypto has a place in its portfolio. So maybe we'll have Henry. What do you think? You have the first fully regulated digital stock exchange. What, in your opinion, should family offices like Sunil give this asset class the true serious consideration it deserves?
Look, we're obviously quite biased because we focus so exclusively on digital securities. And so maybe I'll let some of my colleagues on this panel talk a bit more about the cryptocurrency side of things like Bitcoin. I guess Fusang's interest has always been using blockchain technology to represent, as I said, very traditional, or traditional in the legal sense, instruments like shares and bonds, etc. So to give you an example, we Fusang have digitized 100% of our own equity. So instead of having paper share certificates, we have these blockchain-based tokens that represent our shares. But in every legal aspect and otherwise, these are just the same shares, right? There's no legal difference in the instrument. It's just a slightly different technology layer. And the analogy that I always use is that it's like the difference between back when we had paper, open pit, open outcry trading on stock exchanges, and that moved to electronic trading. I remember when there were special e-trading sessions every day on the stock exchanges. And now it's just trading. That's just how it works. And my belief is that the same thing is going to happen to digital assets of all kinds and digital securities in particular, where right now we use the digital term, but at some point, that's just how all securities are going to be recorded because it just makes sense. It's operationally more efficient. It's more convenient for investors to transfer around. And it means that we can dramatically enlarge the pool of both the types of issuers that we have and who we can have as investors investing into these securities. Oh, I think you're on mute, Melissa.
Yes. Yeah.
Apologies, I have some construction work going on in the background. Ryan, would you care to maybe, add to that, since you have a digital asset platform that's quite comprehensive?
Sure. Yeah, I mean, and I think just following on what Henry was mentioning is that, there's definitely sort of participants in the market that are focusing on key elements, that are either concentrating on certain aspects like the security token offering or regulation or licensing on custody. But yeah, I mean, ultimately, the ecosystem, and I think we spoke about it before, but the ecosystem has really spent the last sort of 2.5 years building and reducing the barriers to entry for institutional players to step into the space. It really came to I think it was really sort of a number of different seminars and presentations like this with family offices and institutions alike that said, we'd love to get in. The traders want to get in, but you simply cannot sign up and deposit $10 million into a private entity and receive and actually take the cryptocurrency and take the delivery of it onto a treasure, which you're going to put into a safe. It just simply wasn't a viable option. So, again, over the last couple of years, a lot of firms like OSL have really sort of, and regulators and government and sort of global bodies are sort of all coming together to give that clarity, to give that playbook. As mentioned, SFC, MAS, locally within sort of obviously in Asia are really stepping into it, giving that playbook, giving that a legitimate, transparent tick of approval on a vendor to trade with, a venue to trade. With, again, strong AML, KYC policies, source of wealth, source of funds, So really ticking the vendor box, ticking the AML, KYC box. And then you have the product offering from, again, two and a half years ago, there was a spot market and a sort of ever growing sort of futures market. But now you have a strong spot, futures, options, borrowing, lending, swaps market that you can trade on today. Allowing firms to step into the space and not only transact in with some good size, but also hedge out the risk that's required. So it's the barriers to entry have been reduced, and the significant and institutional players that are stepping in, from a JP Morgan to a Fidelity to a Paul Tudor Jones, to really recently with a number of different firms allocating hundreds of millions of dollars of their treasury into the Bitcoin space, and it just shows the adoption that is out there.
Yeah, thank you, Ryan. And Alex, you come from a traditional finance background yourself. Maybe you can care to add a little bit more to that from your perspective, of course.
Sure. So effectively, I used to work for a global custodian, Bank of New York Mellon, and then SWIFT, helping asset managers connect to custodians, and then custodians connect to market infrastructures like SGX, ASX, or Hong Kong Exchange. And what I'm observing in the new industry I'm in, which is the digital asset space, is that this infrastructure layer is really shaping up quite well, with exchanges that are effectively regulated more and more, that do proper KYC AML, as Ryan explained, with broker dealers, with custodians, with the necessary players to make it truly institutional grade. And I think the fact that, people with an interest in this space have been reading in the press that there are more and more institutional players, or even corporates, allocating part of their treasury or their capital into BTC, Bitcoin, and other crypto, because that layer is there, because they are confident that they can safely invest into those type of instruments now, and have no risk of losing those assets by lack of proper operational framework or lack of technology. Technology is there, operational framework is there. Most custodians, it's the case for on-chain custodians, are insured, are audited properly, are regulated, and I think it's really the right moment to seriously look at it if you haven't. And I guess it would be a good time to see the outcome of the poll, to see whether any of our audience has already investments into digital assets.
Yeah, look forward to getting the results of that poll. Please, if you haven't yet answered, please do so. I wanted to have a discussion about whether institutional adoption has truly increased. I remember being on a panel exactly 2 years ago in Barcelona, where we were discussing, that in 2018 we were going through crypto winter, and obviously things are changing. They thought 2019 would be the year of adoption. We are now at 2020. Crypto winter has thawed. What's your view, Henry? What have you seen any difference between retail versus institutional demand in terms of the mix, and you see adoption from your side?
I think undoubtedly every major financial institution today has huge exploratory teams looking at crypto assets, blockchain, securities, etc. 2 years ago, there was a prevailing narrative in the banking space of we hate crypto, right? From JP Morgan to Goldman Sachs to all of those people. And fast forward 2 years, every single one of them is hiring massively to try and build out their digital asset teams. And we're working with a number of these banks to actually look at listing real world assets. And some of them are, I think, in looking at the digital asset space at a much greater scale than most people expect. And that narrative has shifted very fast. That said, a lot of this is still very early days. I think we're in the very first few innings of the digital asset space. There's still a lot of POCs going on, right? Still a lot of tests where they say, okay, I'm interested. I want to do 1 or 2 transactions. I want to try this out. We're still in the very beginning of that curve, so to speak. It's certainly not mainstream, but I think that within the next 12 months, most people will be shocked to see the number of large bulge bracket banks who actually open up with these large offerings. Say, you know what, I'm a large investment bank, whether it's investment banking, IBD, or advisory or trading, we're all in on this space. I think you'll just, like any new technology, the adoption will increase as you see more and more and more of these players come to the market one by one.
Mm-hmm. So you think we are getting towards a critical mass in terms of adoption then?
I don't think you need critical mass in the sense of, there's a narrative in the digital asset space of when is that one moment that's going to come when boom, it takes over the world, and is it institutional adoption or whatever? And I don't think that's the way things work, right? It's a smooth curve, and it just accelerates. And like all technologies, I think it takes longer to adopt than people imagine. It's not 12 months, it'll take years. But when we look out 5-10 years from today, I think people will also be shocked looking back at how much capital markets have transformed as a result.
Thank you. And Ryan, being head of institutional sales, this is right up your alley. Can you share some insights from your perspective? Have you seen more institutional demand relative to the business?
Sure. Yeah. I mean, I think that Henry nailed it. I mean, ultimately, there is some bulge bracket banks out, especially in Asia, where we're focused, where you will see a large announcement from them. And it's not that they've been looking at it for the last 6 months. They've been looking at it for the last 18 months. Very outward facing, using JP as a perfect example, outward facing, no to crypto or to the digital asset world, but inward bound, they have teams of 50 to 100 guys that are sort of doing these workshops and are trying to understand the space and how they can move into it. The questions are changing dramatically from 2 years ago, which was, why should I get into space? What is Bitcoin? It is all about, there's a lot of debunking of myths, there's AML concerns, and now it's, how do we get into the space? How do we work together with a vendor that's had a number of years of experience in different fields? How do we use our name and, from a banking point of view or an asset manager, et cetera, how do we use our name and our sort of clientele, but your expertise and your understanding of the space and sort of merge and do a bit of a joint venture, which is also really, really helps the client because, the end client ultimately, because, it's quite a big leap to step into a brand new asset class and a brand new custodian and a brand new, vendor. So if you can, assist in the smooth process of that, it definitely helps.
Yeah, thank you. And Alex, please share your views. I mean, you're offering a very important service, I think, because custody for crypto, which has had, a lot of problems with hacks and so forth. Will you care to add to, how you see institutional adoption? Has it increased in your perspective?
Well, it depends on how you call what you name institutional investors. So in the crypto space, the crypto funds, etc., or fund managers who are familiar with the industry, obviously they're just piling up Bitcoins and other assets because they have a strong belief in this world. But we do see new type of customers actually that we have onboarded recently, licensed entities like trustees who wants to offer that to their customers but don't have the know-how, operational or technological know-how to build something or don't want to build something, and we kind of playing a role of a sub-custodian for them. That's new. It happened in 2020. We keep talking to traditional banks like Deutsche Bank and others who have a custody business and are looking at the space, but still wonder whether they're going to build in-house, whether they're going to do a partnership, whether they're going to do sub-custody setup. And then a new interesting element that I would like to share is the retail side of things, not on the buying Bitcoin and hoping it's going to go to $100,000, but more the facilitating business using, for example, stable coins. We recently onboarded a company in Singapore called Xfers because they're launching a Singapore dollar stable coin. They're not going to use that necessarily for the crypto market. They want to use that as a way of payment on their payments platform they already have in place for Singapore dollars. And that's something interesting because it demonstrates that there is an appetite from traditional payment infrastructure, I would say, to explore the use of stable coins instead of the fiat currency in some scenarios and use cases. And I think there will be more and more, not only for domestic payments, but also for cross-border remittance.
Okay, thank you. Now I want to maybe bring in Sunil next. What are the risks in terms of crypto assets? How can we mitigate them? In this report by Fidelity, apparently the three biggest obstacles are price volatility, market manipulation, and lack of fundamentals were the top three. Sunil, maybe you care to share from your perspective, what do you see are the risks that, have why you haven't already dipped your toe into the market and how that would help address your concerns?
Sure. So for crypto assets to become a mainstream asset class, like let's say gold, you basically need three things, right? From any institutional investors. One is they would be looking at the safety or the custody of the assets that, hey, if I'm buying an asset, can I bank it with a JP Morgan or, some custodian which is going to be around and not with some wallet which disappears overnight. That's one. Second would be if the asset class is regulated, that again would lend me more confidence. And third would be in terms of volatility. I mean, once we are having more and more instruments being traded and all that, one can, hedge the risk and all that. And obviously, as the asset becomes a main class asset, the volatility will increase as, the volumes improve and more players come in. So looking at the panel and, all the good work being done by my co-panelists, whether it be in terms of infrastructure or whether it be in terms of, educating the average person. Right now, crypto assets are looked at more of, a retail trade and all that. But once these three things are in place, safety and custody, top class regulation, and other instruments and choice, which will reduce the volatility, what you're going to see is like a J-curve adoption. So till then, institutional investors will just be, dipping their toes. Now, take the example of gold, which would be equivalent or alternative. Family offices like us can go 5%, 10% into gold overnight through gold futures, gold delivery, move in and out. But that they wouldn't be doing it with cryptocurrencies. So the idea would be to take a minimal exposure, watch the developments as the infrastructure is being built up, and how it plays out, and gradually over a period of time, asset cryptocurrencies become the main asset class, increase the exposure, and I think give it another maybe 5 to 7 years, you will see sort of a J-curve adoption, wherein institutional players will be taking a serious look, and cryptos have to be part of the portfolio.
I hope it's not going to take 5 to 7 years, Sunil. I hope it could be faster than that. So I think we're seeing some of the results of the poll come in already. And for question one, it's very heartening to see 2/3 of people have more than 5% of their portfolio already in digital assets. So well done, And for question two, it seems that roughly tied, the main reasons for not having invested or very little is between regulatory uncertainty and lack of adoption by institutional players. I guess that's a little bit of a circular argument, right? You need institutional players and then, more will come in. Will anyone on the panel want to, maybe just respond to Sunil on the points he raised here? I don't mind. Anyone can go ahead.
Sure. If I quickly step in there in terms of, very often Bitcoin's been, compared to gold, and through the years, in terms of safe haven assets, and what it's definitely proven to be is an uncorrelated asset. The ability and the statistics, especially over the last 5 years, obviously, as mentioned, it was founded in 2009, but the last 5 years and in terms of the data that shows 100% that the Sharpe ratio for your portfolio would be significantly improved by allocating 1 to 5%, as I think a lot of the attendees actually are allocating. By allocating that into the portfolio, it definitely improves the Sharpe ratio, and it's definitely, of course, been one of the best performing asset classes across or products across the year. Has really shown that Bitcoin and a number of the others are here to stay. They have the ability to stand on their own 2 feet. Bitcoin itself, without any governmental, requirements or any government sort of stepping in, which again really helps the market and presents it to the institutional space as an alternative class, as a way to do it. And of course, we mentioned here the regulatory uncertainty. Now that the regulatory clarity around the world is coming, the institutional players will step in, and that volatility that it's known for will be reduced to a level that I think a lot of firms are a little bit more happy with or content with, and maybe reduce that sort of internal or intraday movements. Right now it's pretty much retail's on the bid and ask. So any kind of gap move is just because it's a retail. There's no institutional guys sitting on the bid or the ask to sort of absorb those kind of big moves. So once they get in, the intraday volatility should reduce and to a level that's a little bit more acceptable.
Well, if I can only add something out here is, Bitcoin was supposed to be, a contra to the general panic in the markets and all that. So the idea would be you would have gold and assets like Bitcoin in your portfolio. So whenever there is a depression or sell-off in the equity or the global financial markets, these would act as counter-cyclical. But what we saw in Feb and March of this year, when we had the global meltdown, the price of Bitcoin also actually crashed along with the global financial markets. So I think we probably need to give it a little bit more period of time to see how again Bitcoin and other such cryptocurrencies are going to perform in such kind of market cycles before we can say that, hey, it's really improving the Sharpe ratio. I think the period of past 2 or 3 years, which predominantly has been driven by retail, I think once the institutions come in and how the behavior of the cryptos is, and what portfolio diversification advantages we can get, I think that's something we would want to see for a year or two.
Well, it did go to in March to 4,500. It's now at 12,000. So the recovery has been quite exceptional, to be honest, and not because and despite the fact that the economical situation is not improving, despite the fact that markets have been going up and down, they also have recovered. But I think I believe that correlation is definitely. Well, the lack of correlation of Bitcoin vis-a-vis the rest is proving itself more and more, and I think it makes sense to at least have a portion of your investments in Bitcoin as a way to hedge the risks of your other investments, the same that you would do for gold. And by the way, with gold, you can now buy gold-backed tokens that you can even use as collateral for your crypto transactions, or even deploy into investment products that pays a yield of 3 to 4% in some cases. So it's kind of interesting that gold is paying interest.
I'm mindful of time. We have only about 2-3 minutes left. It's very heartening to see that in terms of the poll, roughly half of the audience are into other cryptocurrencies besides Bitcoin and the various coin offerings. And 17% have bought equity in blockchain technology companies and supporting their growth. So that's very heartening to see. Maybe the last 2 minutes on hot topics, DeFi and CBDC. Henry, I know you have a lot to say. Can you maybe share a little bit of wisdom in the last few minutes?
Well, we don't have much time. So all I'll say is, I think a lot of decentralized finance, DeFi projects are really not as decentralized as people think. Most of them still have very strong central control. And certainly most DeFi tokens are being traded on centralized platforms, a significant portion of them. So I think of these much more like P2P platforms, just like you saw in China. They're being run and operated by a company, and it's just the way in which they interact is sort of peer-to-peer. And that's certainly a model, but I don't think that it will absolve people of the need to have regulation and compliance.
And Ryan, please.
Again, in terms of mindful of time, I think the idea behind decentralized finance is fantastic. I think that the market has to mature and grow, as I'm sure it will, and with the institutional adoption, hopefully there will be players that will do it, and we are seeing the market self-govern, which is obviously fantastic for us and for the world. And then CBDCs, I mean, of course, around the world, there just continues to be news on a day-to-day basis for gigantic countries like China and various others that will push this out. and really open the eyes to the world of their 1.5 billion, etc. Staff or people. I'm kind of referring to Facebook Libra here, but yeah, fantastic on both sides. They just need to mature into it, and we hope that can happen.
Alex, any last word?
Sure. So I think the future in terms of the future of finance will not be decentralized finance or centralized finance. It will be open finance in the sense of a mix of the above. Decentralized access to products that will have, in a way or another, will have to be controlled or managed on a centralized way because of regulatory requirements. So I think the best of both worlds can coexist, and I think that's what we will be seeing in the future.
Cool. Thank you so much. Thank you, Sunil, for giving us the perspective from a single family office, and especially to Henry, Ryan, and Alex for sharing your expertise with us today. I don't know, Alex, if we have time for any questions or if there are any questions from the audience. Should we check on that?
So there's no questions which have come in just now, unfortunately, but what we're going to do, we'll move into the roundtable presentation from on-chain custodians. So I'd like to thank you, Melissa, for moderating, and of course, thanks Ryan, Alex, Henry, and Sunil for sharing your insights on this subject. And yeah, and then we'll move into the roundtable.
Great, thank you.
Thank you, guys.
Thank you, and stay tuned.
Yeah, so we're going to introduce now El Lee. El Lee is Chief Operating Officer at On-Chain Custodian. We also have Steve Clark, Head of Institutional Business at On-Chain Custodian. So this is a roundtable presentation. We do try to keep these as interactive as possible, and I'll leave it to Steve and El to explain what they do, how they do it, and how they plan to moderate this session. So over to you, El. Over to you, Steve.
Okay, excellent. Thank you all for your time today. We really appreciate all the panelists for the thought-provoking discussion earlier. What me and El will be presenting today is more or less on a day-to-day basis how we manage inquiries from family offices and high net wealth individuals, especially on the pain points that we find either to people who are exploring diversifying their asset portfolio into crypto, or people that have crypto and are basically wanting to dabble further, but have some hesitations entering. So for us, one thing that has come to light has been very clear, has been the lack of knowledge or education given to the family office high net wealth community. And that's something that us at On-Chain Custodian prides ourselves with trying to educate first and remove the sales factor. We like to listen to our clients' needs, listen to how they want to operate, and progress our discussions accordingly. So a lot of clients, especially in Singapore and Hong Kong, have been reaching out this year. And each week we're basically been guiding them on the custodian, whether based anywhere in the world, is the first point of contact to begin the relationship upon entry into crypto. Simply being for that reassurance of the management of the private keys, the security, and the tech that has been provided to ensure an enhanced peace of mind over your crypto asset portfolio. This together with value-added services that have been rolled out along the way. So for us, we've found most family offices and most high net wealth individuals have been pending or waiting for their private bankers to give them an update as to when they will have their assets secured. And due to that, sort of since 2017, that lack of commitment or guidance has led them to simply from a Gmail account reach out to us privately to see if we can help them secure their assets. So for us, the primary focus is on the asset holdings, So for today's dialogue and discussions, we just want to highlight that simply we want to be open to all parties. So we may have already reached out to you on this from this event. We may have asked for just a simple introductory call. For us, our common theme is simple. We want you to be reassured and comforted that in the fact that there is custodians out there that wants to keep your assets secure and then guide you along your process. Like whether you're a family office or part of or a high net wealth individual, for example, that simply wants to hold BTC and work out with your BTC, how is it secured? How can we take the management from self-custody, which is most of the qualms we receive from our clients' pain points, and move that to a multi-sig wallet honored by a custodian. The next part is, how do people enter further or start an entry point into crypto? Now, you can simply go to a crypto wallet, a retail wallet on your phone. You can go to an exchange, you can open an account. Each of those wallets, a single signature passwords, meaning login, sorry. So the password, if say it was the same as your email account or the same as an account that you use regularly for, say, internet banking, and your emails were to get phished, for example, that person who successfully penetrated your account or email with that and obtain that password, they could then thus gain access to all of your assets and push them out. In the multi-signature environment, it's where basically yourself logs into our platform or via API keys. You basically call to make a withdrawal, and upon certain checks and confirmations on our platform, followed by our operational flow with our team receiving those requests from clients and then confirming the details with them. And to unlock the withdrawal transfer process, it's simple. We would basically either give you a call back as per your instruction or help guide you that we are comfortable to process this withdrawal for you. So it's not only a peace of mind, but it's also something that we feel is essential or an integral structural part that's missing in the current synergies that are available out there. And then from there, once we've got that client comfort, then we plan to progress to really see, okay, if you require services to onboard or invest further, or say you're a long position US dollars right now, US is printing money like crazy. For us, our family offices have simply been, they're not sure of the counterparty to convert their US dollars into Bitcoin or ETH, for example. So here at On-Chain Custodian, we have tailored a panel of partners in multiple jurisdictions to basically give us or try to obtain the most competitive conversion quotes, just like you would do with your FX brokers. So for us, we would go to those panel that we've already KYC'd and done due diligence on, and basically come back to you with the best rate we can offer for you. You can compare that to the market and then proceed. We can help guide you as a value-added service to then have your assets deposited into your wallet address with us. So for us, we feel the entry point is clear. A custodian must be sought first. And from there, we welcome any further discussions later on in this open forum. I'll pass the ball over to Elle, who'll go into more detail on what else we can offer for your prospective review.
Thanks, Steve. Hey, everybody, this is Al over here. I'd just like to share with you this really exciting space in the crypto asset space. What you have just heard from the early panel, as well as from Steve, it's how we as a firm and as an industry can introduce you to crypto asset, for example, like Bitcoin. But the industry itself is more than just about Bitcoin holding a type of token as a treasury reserve, right? In essence, crypto asset is within an ecosystem that is growing, and there's a lot more utility than you would think. For example, recently, just to get you excited, I got a mail from one of the Singapore banks, and there's an asterisk to a 1.88% kind of a fixed deposit rate that they're offering me as a promotional attraction, right? And this is, of course, strictly from my perspective, not investment advisory, but sharing with an audience over here what I've seen. And at that rate, I have to do fresh funds deposit. My investment is kept to a certain amount. and I can go above that and I've locked my funds for, let's say, a year, right? But in the crypto space, there's actually really interesting stuff going on. For example, stable coins like USD Tether. I'm not sure if you heard of it, but it's a stable coin which is pegged to a US dollar. So more or less, whenever you exchange back a Tether to the market or any of the issuers, you get back almost a US dollar one for one. And with that token today, there is a lending ecosystem out there that can easily fetch you somewhere between maybe high single digit to double digit returns in terms of annualized interest rate. Now, what it actually means is today, if I were to convert my US dollar into a USD Tether and were to deposit with an institution like on-chain custodian and have us lend it out on your behalf or invest it on your behalf, you could easily enjoy a fixed income of, let's say, high single digit to double digit returns, right? That's easily 4 to 5 times more than what a bank can offer you. Again, these are really interesting stuff that happens in the crypto space. Of course, one of the common questions that Steve and I get from people that we meet, it's how is the crypto industry able to do something like that when the banks can't do that? In all honesty, the question is best posted back at the banks, what they are creaming off before they return the interest to you and what sort of prices they have to pay in order to reduce the friction in between, right? And in the crypto space, we've probably heard from the earlier panels, how it is designed to be less frictionless. It is designed to be operational efficient. That is the reason why we're able to generate a lot more interest with crypto asset actually. And at on-chain custodian, if you look at the slide that Steve has put out, and we do a couple of things other than just holding asset. Other than introducing you to how to invest in this crypto asset, we'll handhold you and to walk you through things like your fixed income returns, which is possible as well. If you have additional holdings, you're just holding it for long term in terms of Bitcoin or other types of token asset, we could look at lending out that amount for you. That could be interesting for you as well. Now, if we move down the road, number 4, we've got borrowing of crypto assets for trading purposes as well. So, for example, asset managers or FOs that have contacted us due to certain market condition are favorable. At times, they will want additional crypto or credit line for trading. That's when we actually help them to borrow crypto for that purpose. And on top of that, we serve as a payment service provider as well. So we're able to help you sort of remit USD Tether and convert that to US dollars, or even do Sing dollars to XSG, in terms of Singapore or other parts of the world. So in a nutshell, in addition to just holding crypto asset, there's a lot more utility to it. And on-chain custodian, as a house, we're able to provide you with that one-stop shop solution. And back to you, Steve.
Yeah, so we just wanted this presentation today to be a bit more interactive than maybe others you've been to, simply because we'd like to hear from you and your opinions or your voice. So for us, we just gave a high-level overview, what we're talking to with family offices and high net wealth individuals. Most of them come to us or came to us in 2019 when we launched in April our cold wallet offering, simply to go, well, we want to use you. We're not sure about the other counterparties, and with all the with all the hacks that have been occurring at exchange levels, there's been a lot of discomfort or lack of trust or unrest in where your assets are actually safely held in today's world. And that's something that's been really frustrating for us as a custodian, to encourage our clients to enter into greater positions in crypto, or encourage them on the journey to move diversifying their portfolios across into a greater percentage into crypto. So for us, we've rolled out these services based on being a reactive custodian. So say for today's call and discussion, we'd like to hear any comments from yourselves. And basically, this is how we guide our business model. We want to be a multi-touch point approach. Like you see, it's myself managing the client relationships on the call together with one of our C-level, our Chief Operating Officer, El Lee, and earlier you heard Alex speaking on the panel. So we hope that by having this multi-touch point approach that the client feels comfortable, the client feels that we are a serious player that is here for the long run. So for us, these value-added services are just the tip of the iceberg for what we're planning to roll out to offer to all of our clientele. But for now, this is what our clients have requested and we have delivered. So a lot of clients now feel comfortable using a custodian to then, in a way, in a prime brokerage concept of having a panel of brokers for us to go to source the best rate, while lending and borrowing rates will occur in the same fashion. And that's brought a lot of comfort to our clients. And also the family office sector has been very grateful in taking a lot of operational tasks that were quite troublesome on their side, and passing that over to the custodian to manage has also been a win-win for these relationships. Now, passing it over to the floor, was there any parties that had any questions?
So I will be moderating the panel here. It's Alex. So I have an hand raised from one of the attendees, Avanish. So I will give him the floor. I think you should be able to speak and even show your face, Avanish. We can't hear you if you're speaking.
This is Alex speaking. If there's any audio issues with the participants with questions, perhaps it's best to direct those questions on the chat. So if the audio doesn't work, or if the microphone, sorry, doesn't work, please post the questions on the chat.
Yeah, it seems that there is a problem effectively with the audio for Avanish. You can put your questions in the Q&A and we'll try to read them as they come.
Well, the questions are flowing in. I just wanted to add one point with what On-chain Custodian is doing right now. We're based in Singapore, and just for the comfort of the audience here and the family office reps, they're on the call with us today. You know, it's important to be dealing with regulated and compliant entities, and we're fully dedicated to that as well. Just to reassure you, at this point in time, On-chain Custodian is actually applying for a payment services license in Singapore. So we are an exempted entity that is allowed to deal with regulated activities, especially dealing in digital payment tokens, for the example, like Bitcoin. So your assets are safer with us in that sense. Alex, just checking back with you. Any questions we have on the call?
Not for the moment. I think
okay.
Avanish is trying to send his question. Yes, okay, so I have one. What is the future of the digital assets in 10 years? Will it be a replacement of conventional currency?
Well, I'll take that question. I think it's really interesting. In earlier panels and broadly this year in 2020, you might have heard of the term CBDC, which is a central bank digital coin or token, right? In short, I think central banks are trying to replace currency in a digital format. And one of the key reasons for doing that, from my perspective, is really the audit trail and traceability of currencies once it's gone digital, right? So it's a lot easier to trace. And of course, from a federal or government perspective, it's always about tax. So that's really helpful for authorities to know about your tax and flow of funds in that sense. So I do think that going forward, we'll see a lot more digital tokens or coin in the market, especially centrally issued by central authority. But there is still a space for digital asset like Bitcoins or asset-backed tokens, right? Of course, not everybody wants their token to be part of the central entity issued by their central government. That's one thing. So there will always be a place for a digital asset like Bitcoin. So I think in 10 years time, in short, Bitcoin, it's not here to replace conventional currencies. There will be digital tokens or coins released by central government to replace conventional currencies in the fiat format. I think that will be the case. But on the other spectrum, in the private sector, you will still see a Bitcoin and other token representations.
Yes, so we effectively, to add on to that, it's cryptocurrencies for sure, central bank issued digital assets for sure, or digital currencies. You will have also stable coins. That's on the money side, but also on the security side, as shared by in the previous panel by Henry. Securities token or digital securities are emerging, not only in a representation of an equity or fixed income instrument, but also in the form of real estate investments that are tokenized, fine art investments, both in paintings and also wine, who are being looked at or already tokenized today to facilitate or to deepen the liquidity and also give an easier access to smaller investors than it is today. We have another questions related to hacks. So a number of crypto brokers and custodians have lost huge amounts of client money through big hacking events. How can we be sure that your technology prohibits such actions? If I may start there, and Elle, feel free to jump in. I don't know many custodians who have been hacked. I don't think there are any custodians, at least the ones that have been operating this space for the last 2 to 3 years, who have been hacked. It's mostly exchanges that are being hacked, or asset managers mismanaging their private keys. But Elle, feel free to explain how custodians in general would be doing that and how we do it at On-Chain Custodian.
Yeah, absolutely. And the best way to do that is, in fact, I'll invite Peter for a quick 10 minutes to 15 minutes demo session with me one-to-one. I'll show you how it's done. But in a nutshell, what we do have are 2 things. One is the technology, and the other would be legal protection. Legal protection in the sense that we do have insurance coverage for asset under custody. That helps us in certain scenario, which is covered if there is a hack or external attack on the asset and it's lost. Based on the insurance, we do have coverage and it's claimable for that. So that's one thing. On the technology front, we're quite different from exchanges. The way we have created institutional grade protection for asset under our custody would surprise you by the level that we go to. Take, for example, our warm wallet solution. We deployed that in junction with IBM's HSM technology. And that HSM technology is actually at level 4. Just to give you a sense what that means, the amount of external attacks that it deters is 2 grades higher than what banks have for their crypto protection. Typically, banks go up to a level of 2, and we actually went up to the global higher standard, which is level 4. So that is as high as you can actually get for crypto asset protection.
Yeah, and Steve here, just to add on to this, this then leads me back to what we were sharing earlier about why family offices and high net wealth clients have been coming to us to enter into their crypto positions. It has been the concern or uncertainty of dealing with a new counterparty, say, for example, a broker, who's asked them to send funds or transfer funds, either entering in or exiting from Bitcoin back into fiat currencies. But simply, they were very worried about these transactions and who these counterparties were. And that has been point number 2 I'm referring to on our slide, is simply one method that we have added value to their ecosystem, whereby we've done the necessary or even sometimes enhanced due diligence on our counterparties to make sure they qualify to our level of expectations. And thus the client is reassured that our operating model and track record of working with these brokers around the region is at the highest level of service proposition for these clients. So for them, it's more, I contact the custodian, I verify with the custodian to give us an indicative rate today. I then confirm a timing, maybe next week or tomorrow, when I want to have a live rate displayed to me that I can confirm. I've got that reassurance and comfort that the custodian that holds my funds in air-gapped offline cold wallets and is insured is also able to help me facilitate these transfers. So that comfort there has blocked a lot of the common, I wouldn't really call it hacks, but I'd say a lot of transfers into unknown wallets where people have simply done typos when they've been transferring funds to new wallet addresses without doing test transactions. The other thing is, on top of that, with fixed income as well, when you're sending large funds to, say, like a hedge fund or a high yield offering by a certain crypto entity, they'll say, send it to our wallet address, and here it is here. When you're sending to a new counterparty, and these counterparties may be giving you high yield, but expecting a high amount to be placed to enter into their product offering to obtain that yield. The point number 3, our fixed income offering is simple and a no-brainer for high net wealth and family offices, whereby if you'd like to just dabble or park a certain smaller amount of assets or convert a smaller amount of assets into a crypto lending offering, that is available and accessible only via the custody route. So we've had a lot of people that just wanted to place, say, 10K, 20K, 50K, and those, out of all those clients, those funds were then sent to our qualified lending partner, who provided yield for each of them, but they didn't have to put up with that minimum requirements if they went directly to the same counterparty. So this is just a way that we're just trying to help handhold the transition from the traditional marketplace into the new crypto realm, which is here to stay today.
So thank you, Steve. We have another question from Mohammed on, there's a number of governments not allowing digital currency due to money laundering concerns. What is your view on this subject? I'll start by explaining that the beauty of digital assets on public blockchains, at least, is that it's fully traceable, meaning that you must be a pretty, let's call it the way, stupid money launderer if you're using blockchain and Bitcoin as a way to launder money. It has been the case in the past when tools were not available for identifying transactions and screening transactions on the blockchain to see where flows were going. But nowadays, technology has evolved to a point that we ourselves at On-Chain Custodian, for example, are able to monitor every single transaction hitting one of our wallets or leaving one of our wallets, and identify whether the address it goes to has been tainted in the past by receiving money from a money laundering activity or receiving money from a fraud or a hack. That's a transparency that does not exist in the fiat currency world and the banking system. Furthermore, I'd like to add that regulators has also stepped in, and in 2019, in June, the Financial Action Task Force, called the FATF, is a body that recommends that gives recommendations to governments in terms of money laundering and financial and financing of terrorism, has come up with a series of recommendations specifically dedicated to cryptocurrencies and digital assets, mandating, really recommending, but mandating countries that they oversee to implement what we called the travel rule, meaning that for every transaction that we do as a custodian, or in the future also for exchanges, they would have to transport in with the transaction who is the beneficiary and the ordering customer behind that transaction, similar to what happens in the fiat currency world. So yes, that concern of money laundering was and is still something that is real in the crypto space, but in constant decline. First, because and thanks to technology and the transparency inherent to the blockchain space and the blockchain and how blockchain works, and also due to regulatory new regulatory frameworks that requires virtual asset service providers like us to follow very strict KYC, AML, and CFT requirements. There's another question from Avanesh, who was not able to, unfortunately, speak up. So, hi guys, sorry my audio won't connect. So it would be great to hear your views on the different risk profiles between crypto held in custody with no yield, although we explained that there are opportunities for yield as well, and lending via platforms such as BlockFi or DeFi lending. So maybe Al, you can take that one. So how can we defer the service that custodians would provide in terms of lending assets, or well, that we manage on behalf of customers, and directly going to DeFi platforms like BlockFi, for example?
No, that's actually a very good question. I love to pick on that one. You know, when we talk about safety of funds, I just want to highlight one thing, because we tend to impose what we are very familiar with, the traditional financial institution and what you get from banks. right, into the crypto space. And we keep thinking that when assets are sitting with the bank, it's really safe because you always get your asset back. Now that's of course in good times, right? But if you look specifically into terms and conditions that your banks are offering you or your FI is offering you, check for how much they actually guarantee you against, right? For example, SDIC only gives you 75K of guarantee. That's actually not a lot if you have 100K in it or $1 million in your bank, in all honesty. But back to the crypto space, so when you hold your funds with a custodian, it's actually the safest. In essence, the funds are not something that is pooled in an omnibus account and then lend out or even used as a collateral for further lending. So there's no over collateralization, there's no issue of over lending over there. It's strictly custodized for you. So just be clear on that. So that's how at least on-chain custodian works. Now with BlockFi, with lending products, there's always an inherent risk to the amount because that amount always goes out to a third party or someone else who's a counterparty who's using the asset for whether it's investing, a loan, or some other purposes, right? And what you're always afraid of is the domino effect. If other counterparties fails to return the funds, then you eventually, as a capital provider, gets affected. So that the risk is real. But what we, again, at on-chain custodian work with asset managers as well as lender is to make sure that there's some form of collateral in place so that effectively reduces the risk. The second thing that we do is curate the partners. And so we tend to work with larger lenders and asset manager who actually have very strong backing, historical track record, or balance sheet to back up the activities they are doing. Inherently, that reduces the risk for our client. So again, over to a more open platform like BlockFi and other lending platforms. Of course, I'm not the best to comment on their platform, leave it to you to discuss with them, but there is definitely a risk of counterparty risk, especially when you utilize such platforms.
If there is any other questions, please go into the Q&A or in the chat. Both works pretty well. Thank you for the interactions. It's been good so far. We had at least 5 questions. Anybody else wants to ask a question? Please note that obviously we are available throughout the 2 days of the conference. You can use the great platform that is made available by Alex to us to connect to us and maybe plan for a 10-minute, 20-minute, 15-minute call, just to maybe go into a bit more details on what we have explained today during the panel and during our roundtable. I don't see any further question. Maybe Steve and Elle, do you have anything else that you want to share before closing, like a use case, for example, another use case, or we just we can stop here and invite our guests to connect us directly?
Yeah, and I'd love to invite the guests to connect with us, especially on Mohammed's question, right, about governments not allowing digital currency. Apart from the reasons why they would do that, I really want to emphasize and reassure AFO's reps as well as individuals on this call that at least with on-chain custodian, we're based in Singapore now. The Singapore regulator is very clear on their positioning or view in terms of digital asset or digital tokens. So that is something that is clearly permitted here. It's currently under the Payment Services Act. And as long as you operate in a compliant manner, there's no reason why they would do something that is 360 or 180 degrees to what they set out to do, which is to set it up as a financial hub to facilitate such activities. So welcome you to have a chat with us on that. Over to you, Steve, before we close off.
Yeah, last thing I just wanted to iterate, like Peter Churchhouse is a great comment you raised about the security. How can we be safe? With the exchanges like KuCoin's hack a few weeks ago, and then the common theme of exchanges being centralized hubs where the liquidity should grow and everyone in turn has that opportunity to gain yield either by arbitrage trading or algo trading, just doesn't seem to be on point today. There's still uncertainty, there's still lack of the custodial theme in the exchange communities. And that's something we're working tirelessly each day to try to sort of mitigate discussions where how we can step in to add value or grow. We're seeing more and more, and Alex and Elle could attest to this, that exchanges, say last year when we approached exchanges, they were a bit hesitant to work with a custodian. But now over the last 12 months, we've noticed a change where exchanges are now actively approaching us, not just because of our convenient time zone in Singapore for Asian exchanges, but more from the comfort and the push from their clientele, or either being yourselves, being the family office networks or high net worth community that's added pressure as a community to want to have an independent third-party custodian involved, to want to make sure to the exchange and make it clear, we want to grow with you, we want to place more funds with you, and we do see a potential synergy in the future, but we're just not comfortable with the current market practices of the exchanges today. So I'll just close with highlighting, even though, like Alex mentioned and Elle was saying earlier as well, with banks today, we're still seeing FIPS level 1 and 2 security from the 90s still kicking in. For us, we only go for this, the highest level possible. Why? Because we care about the service we offer to our clients, and we want you reassured that we're trying to remain and be on top of the security curve to make sure that the most stringent security offerings are available via on-chain custodian. So our clients basically seem to gravitate and move the funds across to us, hold the funds with us, and then so 90%, 80% subject to the risk tolerance and threshold comforts, they would place, say, predominant amount in offline cold wallet air-gapped storage for either succession planning, which we can talk about another time, or for just future comfort, knowing that peace of mind it's secured. And then the lending element is more simply, they want to cover their custody fees. They want to make sure that there's a certain yield available on top of covering the custody fees. And they want to see how the custodian can add value to them. Because I can tell you today, most family offices that we speak to just don't have the same comfort with other segments of our space. We hope that changes dramatically with all the regulations kicking in around the world, which is a positive addition to what's happening today. But we will continue to make sure that the trust and the comfort and commitment from our side is given to our clients and to yourselves for any further follow-up query or questioning that you'd like to talk offline with us. So thank you very much for your time today.
Thank you, Steve. Thanks, Alex. Thanks, Elle. So we'll call that a wrap for the crypto panel and the presentation, and of course also for today's session. So we look forward to seeing everybody 9 a.m. Tomorrow morning. Thank you.
Thank you.
Thank you.